And good evening, everyone. We're taking a look at the daily price action outlook for January the 8th, 2013. And you should have all the price levels in your email box by now. And if you have not received that, then just simply check the team page and it will be in the discussion area. And also, there was a oil trade I put in there as well. I took a stab on this oil, looking for a basically a fall in the Asian session. And it's got a good risk to reward profile on it, so we'll look at that. And we're just going to rotate here through a few things. The charts have now changed again, but just really the areas of where they're at on the screen. So with this scanned view that we're using, I'm going to keep this up for a while, this Euro odd and the Euro pound. And we're just going to switch that out for correlation. And what we're going to do is we're not going to draw up the zones on this every day, but really during the London session and New York and more of the active trading hours in the lounge here, we're going to do some analysis and basically draw some stuff, trend lines, look at fibs and move fibs, but really focus it more on using it for that particular day, right? And as opposed to the dollar index, where we do the zones because of the weight of it. It hasn't been the greatest thing for the correlation up until the last few days, but all in all, year by year basis, of course, it's the thing to do. So let's take a look at the Euro USD for the upcoming session. The plan worked out today. I was long here on the euro all day long, and I never did attempt that short, and everything worked out fine. I've got this line here where we're at, and I think we're at a resistance level. Now, it's not a zone, okay? I've got a zone a little bit above this, but it is a level. And if you see here, just going back a little bit on the chart, which is, I think this whole area right here just sort of tells a story of the current market conditions of where we're at. I don't believe we need to go too far back. There are other lines presented on the chart, though, so... taking a look at this, I think we're at an area where this could start to go down in Asia right here, right now. I am bullish on the euro again tomorrow, at least for one lower high or a higher low situation. So my bias as far as being short has not changed, but the fact of the matter is we're back into an area which it does appear, if you look at the chart here, it does appear that it's in a middle area, such as we've talked about with the Aussie dollar, and something that I was not interested in trading, but that's really not the case with this euro. It is actually trending. Okay, it's just really the view of this daily chart and the scope of this area. Really, it's sort of like a box, a price box almost, and it's just different than the Oz. But at this point, if you want to look at something in Asia, of course, daily sort of thing we're doing here at this point, similar situation with the price action entry yesterday. So, just to review that real quick, the option was to take the trade at the close of this candle, and you're a daily trader. You don't come back till 12, 18 hours later. Maybe check the charts every 4 hours, and you take your profit in the New York session. Or you look for, during the London, and you're doing an active intraday session sort of trading, you're going to be looking for that pullback to get a better fib entry, sort of a finesse stuff. So you have to determine for yourself if it's worth it. And usually that is depending on the trade. It's depending on what's going on in your own personal life as well, right? So, and of course, it's depending on the stop loss. Let's not forget that, right? Nobody wants to forget that. Okay, so let me just get rid of that arrow. All right. So I'm looking for a long here, but I can't deny the fact that we could go down from here. So I'll be looking for a higher low situation. I'm only going to go into the 4-hour chart, and really I'm looking for this to come down, retest this area, and basically take a long. And then when it gets back to this is going to be the second test. Usually the third, typically over an average of what I've read and what I've experienced myself, is the one that will break. But that's, every market condition is different, right? The point being that it's a scale opportunity right there. Okay? And it could possibly go ahead and head up further and get us back up into this zone here. So you're going to want to at least hold on to a piece of it at that point. But I think you don't want it long here. Obviously, you want to wait for that pullback, and it will happen. But it may happen a little bit higher up than I've drawn. So it's a little preparation involved in that, and if you're going to be around the charts or not. So that's all based on detailed finesse entry stuff. I believe what I've said is more complex than the trade really is, and that's why I discuss these things about taking the daily trade, right? Because even with the simplicity of this stuff on the chart, and with the lack of EMAs and getting rid of the Stokes and really price action based, there's still a lot of stuff on these charts, and it can really confuse you sometimes. So that's the play though. If you want to short, I suggest you're around during the Asian session and take a look at your 15-minute chart right now, and you're good to go, because you are likely going to make some pips if you're going to short the euro here right now during this session. So I'm not going to say that definite, obviously, but this is a good level to do that, and it would be a great thing for the London traders coming in, and we taking this up and marching this forward, and really getting at least a 2-day long out of this. So today I'm biased north, again on the euro for the second time in a month, and it's just based on the price action here. There's been a lot of stuff to tell you that. So started here, and we'll see how this continues. But I think we're just going to get that retest of this sort of wick action, and we will get some more pips out of that. So we'll take a look at a short in the live class, and hopefully if that opportunity presents itself, it will be closer to this red area, this red zone that we have on the charts. Taking a look at the pound dollar. I talked about yesterday that pound possibly could have a little more issues and so forth, but they were going to go the same direction, and that's what happened. It went up, right? Good entry here if you're able to get in on the bottom. And we didn't talk about that. We just talked about basically maneuvering into it based on the time of day, and it not being yesterday a good enough price action daily candle signal to take. In my opinion, yesterday I had stated that in the video, to just sort of take that one right there, where the euro would have been, but it obviously worked out better to wait because it came back not quite as close as to the bottom as the pound did, but it gave a lot better entry and maximized the pips. But again, it's not needed. It's not needed. There's more than one pair to trade too, so we're getting a real balance here of what we're doing. It's really feeling this out, and I think by February we're going to have a really good sense, and I'm hoping the people that are in the FXR lounge will have a good sense of the way they want to trade. Maybe you want to trade just off the daily charts Tuesday and Thursday, and maybe you want to scalp around Monday and Fridays, something like that. But the scalping situation, it pretty much it's handled. When you have these sort of levels and you know what's going on, and you see at time of day something is not really at your level or not, but it's going to possibly be going that direction, that's the best time to really take the scalp up to that level, right? That's the most opportune scalp. But that's not really the majority of the scalpers, right? They're taking stuff, counter trend as well too. So, like trying to scalp in the direction going to where you're expecting is really, you're waiting on your level, but you're also making some pips as you get there. So, you've lowered your probability overall, I think, at the end of the month, but you've increased possibly your profitability as well. So your winning percentage may go down, but you might get some more pips out of it. So that's an option for people. And I just want to state that because there won't be a lot of talk about that going forward. With the scalping stuff. But let's go ahead and take a look at the Aussie. I was talking about maybe just saying it's the same thing on the Aussie. Let's move to the next currency. But at this point, you can't deny that if you're trying to get into a long, it's looking good to get to that trend line up here the flag pattern. Some people calling it a pennant. There's really what it is resistance, and I think this is going up. I think at 105 was long, and I'm going to wait on the short. So, trading the Asian session gives you a little bit more dynamic to it, but I'm optimally trying to get in with this on a fib pullback would have been the long, coming off the 104 area where I would like to see the next long. But, it's a big wick. You have to lower your lot size. And, I actually did not take that. I did not take it. I was not focused in on that daily candle at that time. So, looking at the Euro Yen, this is pretty significant. I think this may be the beginning, and stressing the word may, of the pullback that we're looking for, right? To get to a nice position along. And I think that first place is 113 and a penny. Okay? Now, I think there's a short setting up right here, and I think you could possibly get 200 pips short out of this pretty much between now and the end of the week. Price action wise, this has already started, ladies and gentlemen. If you recall back when we had the long on this, that some people may still be in, that we took here, right? Never really offered that fib sort of come back and then move, which is the major plays we've been doing. But it looks like sort of familiar, doesn't it? It just kind of took off. But now I'm more prone now because I'm thinking Asia's going to bring it down. Just price action we're seeing now, and then we'll get another long attempt that is going with the trend, so it's acceptable. It's acceptable to me to take that. It's not an over trading situation or anything like that. Subsequently, I would think that we are possibly going to then get that lower high, and my approach at that point on this particular trade would be take the entire amount off at the retest of a high. Now, not talking about any positions that you guys may have still moving on up, but merely taking this off the top, and we're looking for the pullback, and we're looking for the continuation to get into the 115 area, and then there's a break to 117, and then ultimately 122 I think could be the target. I think 122 is possible, and I think 115 and 117 you're going to see fairly soon, unless something changes in the market. You'll see it quicker than mid-February, maybe possibly this month when we get some volatility back. So the first pullback on this is going to be a lot of traders trying to take this long, so don't miss out on it. And we'll take a look at it from a daily perspective as we move forward. And again, there is going to be, I think, more of an opportunity that won't make a higher high at 113, but it will get you some daily bread pips, and it'll be fine. So you may just want to mess around with that. I mean, it looks pretty good coming down, I think, at this point for a pullback. And if you're really trading that Asia, use your hourly chart. A higher low situation, just cash out on that. I wouldn't hold it with that volatility of Asia, of the Asian market coming in. So this is the oil trade, and basically what I decided to do at NYMEX close here was let's see, the hourly is really the only clear chart here, and it's looking like it's moving up here, but basically took the short at around the 20 level. That's a little higher actually, and I've got this really tight stop on it right at 39. I'm looking for this to go down. I sent an alert out in the to all the FXR members through the team page, and so our first target on this short, and you've got a better opportunity to enter it now with a 10 pip stop, is 85. I'm sorry, 85. All right, 45 is highly expected, and if it really gets going, 91.35. But that is not going to be like an overnight thing. I don't anticipate. NYMEX will come in, and if this really gets going in Asia and comes down, and you get to 45, you should expect NYMEX is going to take it back up, even if they want to short because they want a better entry. So you're going to want to be cashing out at your decision point area in here, which may be above that level, of course. Always assuming that the lower high or higher low. Don't always assume the double top or the double bottom, right? And your percentage will be better. So I think this is going down. You can see it's a real tight stop, Aaron. But could have put it above here. That's a lot more pips. And I think this is a really good risk to reward potential. I feel good about it. There's your risk, and there's your, I think, minimum reward. 85 really minimum, but even that is a 1 to 2. So you're talking a 1 to what, 3.5, 4? I don't know. Risk to reward. Haven't calculated on pips, but it's worth a stab. And really, at the level you can see we're at, moving back out, 4 hour daily. This is this would be the last place to attempt this, and the best place to get the highest reward for the lowest risk. So that's the plan on oil. And we're not going to mess with this. As I've discussed, this will be things we'll be looking at during our sessions in the lounge. All right, dollar index here. A lot of stuff going on, it looks like, right? Nah, it's really, that resistance, it wants to come down. It feels good here, doesn't it, for a bounce? And I think it really, it's going to come down. Might not quite hit this level. I did adjust this green zone, but 79.90. Okay, if it can get there, 80 might pose the first issue, and then it could bounce from there. So obviously, with the bias we have on the majors going to the north side for another day at least, hopefully this is going to stall out hopefully around here, and it's going to hold above 80. Ultimately, I think really to boil it down is using 80 as the figure. Use it as a sort of mental pivot point of what's going to happen with the dollar index. I think it's as simple as that with the dollar index today. There's nothing else really to it. If this thing breaks to the north side, you can see all the levels we're going to have issues with. It's not going to be a nice ride for the dollar to go up. So, and that's really been the theme, with those shorts we've had, and the dollar's strength, but it really hasn't broken out of this. I mean, we're at the sort of a box, aren't we? Sort of in a level. And this is really, the price action indicating it's coming down. So, on the daily perspective, that matches right with our plans on the majors. And let's take a look at gold. The plan on this is to wait a day or two more and to get a price action signal on the daily and go north. I had discussed yesterday possibly we would get a 4-hour entry on this, and let's take a look at that. Okay, there was a 4-hour entry, wasn't there? But it didn't really do anything. It's not ready yet. It's just not there yet, and that was more prime, wasn't it? Taking it to the short side. I talked about possibly in New York we could jam this thing and get long. Let's look at that hourly chart. And some pips were there, so let's calculate that. A daily bread trade on gold for me has to be about 70 to 80 pips. Okay, now that's getting it in and out, usually within 4 or 5 hours. So it's acceptable. I just did not feel it was the right sort of thing to do. And it just had a lot of problems getting there, too. You can just see that it had a lot of issues. Not a smooth trade. Once we get this signal on this daily, we are going to start getting, I think, a smooth ride up and reload potentials on this. So let's go back to the daily chart. You can make a case that it's longing now. And you could have made a case for now, a week almost. And basically we came down though at what I wanted was a fib and get a daily price action Yesterday is irrelevant. We had the daily price action signal, but it was back at resistance at the close. So I think it's really going to look something like this. And we're going to have a distance between, ideally, that first red area there. And at that point, you'll make a decision that day or the next day going in to either try to fib that for a better entry north or just take the trade. So I'll probably scale into that. I'll likely just take that and also scale into it more on a fib if it does pull back. So that'll be a multi type of thing to get in on that, and I think that'll be very rewarding with that approach. So I'm going to stick with that, and I think that's pretty much it. We're going to reevaluate things. We'll do some stuff with the Euro odd and Euro pound in the London session, and that's going to be your outlook for January the 8th, 2013.